Desjardins says Canadian assets, both stocks and bonds, are poised to outperform their U.S. counterparts, especially amid this unprecedented unpredictability from the Trump administration. Let's get more from Royce Mendes, Managing Director and Head of Macro Strategy at Desjardins. Royce, thanks very much indeed for joining us. Let's start off with the stock market, if you would. Toronto outperforming the U.S. last year and doing the same so far this year.
Yeah, so this is not a new story for us. We've been saying this for some time, that the TSX looked poised to outperform U.S. stocks. And you did see that last year. What you saw was a big outperformance in Canadian stocks, a big outperformance, let's be serious, from a number of developed market economy stock markets versus the U.S. It was really the first year in some time that investors felt that they had other options. And now that we have that track record in the books, we feel like global investors are even more comfortable in 2026 reallocating some of their heavy weights in U.S. equities into other markets. And Canada just seems like a great place to put money to work. We have that AAA rated sovereign. We have a population that, yes, we have our differences, but is not as divided as a number of other countries around the world. We also have a very diversified economy. You talked about how precious metals have been supporting the stock market this year, but also energy prices moving higher on geopolitical tensions, pushing our energy stocks higher. But we have great financials here, very stable financial system, a lot to like about the stock market. And then you just think about generally the environment that the U.S. is facing. A lot of uncertainty there. And you're seeing some of these institutional investors start to rethink how much exposure that they want to the U.S. and looking at Canada as a good place to place capital.
Certainly metals on fire. Maybe we can put up a 5-year chart for copper and aluminum. Aluminum, for example, this week hitting a 3-year high. Now, we don't have any publicly traded aluminum companies, but certainly across the metals complex, there's been an incredible rally.
Well, precious metals you talked about earlier, I mean, they're being benefited by what's going on in the U.S. I mean, the Trump-Powell saga is far from over. It seems like it's firing up again. And what you see is maybe not a huge drawdown in the stock market, maybe not a huge sell-off in bond yields, because Powell did come out so strong and almost boxed the administration in. It's going to be tough to really, it feels like, mess with him very much further. But you do see precious metals continue to rise as global investors feel maybe a little bit more uncomfortable with what they have in the U.S. And you do see a little bit of volatility around the U.S. dollar. So I won't say that there's been no impact. And really, when you talk about central bank independence and central bank credibility, the impacts are more often than not felt over a very long time period. And so what the damage that is being done now may not show up in the stock market right away, but maybe when we look at the end of 2026, as I said, maybe you see a bunch of other developed market stock markets outperform the U.S. again. And one of the reasons is these questions about institutional independence south of the border.
Switch to bonds here. You think that Canadian bond yields are likely to rise less than American bond yields this year? In other words, holders of Canadian bonds aren't as vulnerable to losses?
And it's exactly the same story here. It's about looking at where you want to place a lot more money. Canada is AAA rated, very strong track record of institutional independence. And you think about the term premium that gets built into these bonds, the longer duration bonds that are riskier to hold. And you're seeing, I think, a lot more term premium being built in right now to both markets. But I think there's going to be a divergence this year as we start to see more and more investors think about Canada as a place, as an alternative to the U.S. Now, it's a small market. We can't absorb a whole ton of money. But when you take into account the provinces and the corporates that we have, it's a place where I think is very attractive to investors. And last year, we saw a record inflow into bond funds here in Canada. We also saw a record inflow into equity funds. So it's really just all the asset classes that are focused on Canada are seeing this transition in attitude towards the U.S. benefit them. And we believe by the end of this year, after some volatility about the CUSMA review in the near term, Canadian dollar could be stronger around 134, 135 versus the U.S. dollar by the end of this year.
I mean, our bond yields, though, are so much lower than the United States. it seems interesting that you think that investors will be more ready to buy our fixed income when they're getting such a lower yield.
Well, I think back to a specific period, and it's the 2013 taper tantrum, when investors lost some confidence in what the U.S. was going to do. They felt a lot of uncertainty. And I think back to that time, and I think 2026 could be a repeat of that, where there's a lot of uncertainty about the U.S. Despite the fact that Canadian bond yields are lower, we could see this divergence play out. It's not a huge divergence, but it is certainly a divergence in the gap between longer-term U.S. bond yields and Canadian bond yields.
Now, I think you said we'll see, you have a scenario where you see the Canadian dollar going to where it's 135 versus the US dollar, Royce. And so that would be a Canadian dollar of about 74 cents US.
Yeah, that's right. And I want to make clear that that's a year-end target.
Okay.
In the near term, we could very well see dollar Canada pop back above 140 again. Just on these headlines, you can see Trump gearing up to start these negotiations on a strong and aggressive footing. We fully expected this to happen. We've built volatility into our Canadian dollar forecast. So make no mistake, we see the Canadian dollar going a little bit weaker in the near term on this uncertainty about the trade deal with the U.S. But by the end of the year, we're optimistic that Canada and the U.S. and Mexico can find some common ground and get things back to operating as close to business as usual, certainly not back to where it was before all this, but as close to business as usual as we can hope for.
Royce, thank you very much indeed.
Thank you.
Royce Mendes, Managing Director and Head of Macro Strategy at Desjardins.